we've got people that come to us with suitcases with their kitchen. You know, they bring silver plates and silver forks and silver spoons, and we melt it down and pay people out. So
enough about gold for now. Let's talk about silver. Going
yes.
back to what you were saying about gold, because gold has enjoyed quite a lengthy run up to its high point from last year when it was around $2,000 early last year, right? But
Yes.
silver's run up, silver is always playing catch up to gold, and silver's only really had the last couple of months when it really shot up in price. And we see a lot of that, a lot of hot money coming in from the crypto markets when people were offloading their Bitcoin or other coins and into silver, because silver's usually the more speculative play compared with gold. So, but now that silver's tanked quite a lot, even though it's still hovering around $49, which is compared with, say, this time last month, that's still a really high mark, compared with last month. Do you think silver's a good buy right now? Should people buy the dip? Or do you think there'll be more corrections coming?
Well, silver, I always find it very difficult to predict movements in the silver price simply
Hmm.
because in silver, you've got so many various aspects to the price, right? Silver, yes, there is an investment aspect to silver, but there's also the jewelry and fashion jewelry industry that's a large consumer of silver. Then you've got the electronics and all that ancillary industry, like all the nanotech in air filtration and in cattle and in mobile phones and in all these fridges and microwaves and so on and so forth. So you have that influence as well. You've got a decent industrial use case for silver, which in gold, gold is also used in certain electronics and in space tech and so on and so forth. But there is a lot more of silver being used
Hmm.
in industrial purposes or industrial products. So there's so many different factors really playing into silver. And what I keep saying also to people, and I know it sounds a bit weird when you go to a store and you want to buy a silver kilo bar and you're told, well, it's going to take 3 to 4 weeks before you get delivery. People think, oh, there must be a shortage of silver. There's no real shortage of the product silver. It's just in the wrong form. It's in warehouses in grain form, granulate, and the refineries just have a backlog in terms of spitting out the bars. So that's your bottleneck is the production of the actual bars. There's definitely no global shortage of the metal, the precious metal silver. Unlike, let's say, in platinum, where platinum production over the past decade or so has been quite low compared to the use. So in platinum, you have a systematic shortage in supply, which also plays into this whole price increase in platinum as well.
Hmm.
But in silver, there's no systemic shortage of the precious metals as such. Now, again, if you want to trade short-term volatility, there's silver miner stocks out there, there's silver ETFs out there. We're down over 10% within a week, but up over 10% the last month. So obviously there's volatility there. Where there's volatility, you can exploit that for short-term gains. Um, Important in the silver trade is the ratio. There is a lot of ratio investors as well. They look at the ratio between gold and silver price. It is currently still rather high. If I can pull it up here, it's 84.5. So it's more common to be somewhere between 45, 55. 84.5 is rather high. So, but then again, is gold too expensive or is silver too cheap? Or is it a combination of both?
A bit of both,
Um,
probably.
Exactly. So what I can say though is that you really in silver much more so than in gold, we do see more people selling. I mean, we've got people that come to us with suitcases with their kitchen. They bring silver plates and silver forks and silver spoons and are basically saying, well, look, the next generation doesn't really want this silver cutlery, and at this pricing point, we might as well just make a buck or two out of it, and we melt it down and pay people out.
Mhm.
So and like I said, we see much more people do that with their silver than people are doing that with their gold. So is that really going to move the needle downwards in terms of silver pricing? I don't know. And again, sort of a one point that differs silver from gold is that central banks usually don't buy silver that much, if they do at all. They're very much focused on gold. So yes, you have institutional investors, hedge funds, silver ETFs, asset managers that do take silver positions and sometimes do so in physical form. But the central banks are not big buyers of silver, not that I know of anyway. I've
Mm.
never really come across any central bank statistic that, indicates that whatever the German central bank or the Bank of England has taken large positions in physical silver. So again, to your point, is it an opportune moment to buy silver? If you're buying physical, do your dollar cost averaging. Silver is actually very well equipped for dollar cost averaging in your investments because it's a much more accessible precious metals, especially at these price points, right? I mean, an ounce of gold right now is going to cost you more than 4,100 US. An ounce of gold, sorry, an ounce of silver, where even in physical form, you're looking at low 50s, maybe mid 50s US dollars. So it's much easier to dollar cost average at these price points, of course, in silver than it is in gold for most investors. And to come up with an investment plan where once a quarter or once a month or at least every 6 months you buy a kilobar of silver or something like that is very advisable.
Mhm.
Then again, just put it in the safe, keep it there, and long term it will also perform.
Diamond hands.
Exactly.
Well, one of your points, it sounds like, so are you saying that there's a misallocation of silver because there's no shortage, but on the market it seems like there's a backlog, but this is a plentiful resource still, right? So is it a misallocation?
Well, is it a misallocation? It's a misallocation of production capacity,
Okay.
right? And of course, who produces silver bars? It's the same factories that produce gold bars. And gold bars have been very, very hot and very, very much in demand over the past months and actually 2 or 3 years.
Yeah.
So, of course, the focus has been very much so on the high value item, which is gold. And of course, look, the big refineries in Switzerland, they're very large factories. They can run multiple shifts and produce gold and silver and platinum all at the same time. But out here in Asia, production is usually limited to one line of production. So the factory is either producing gold or is producing silver. And of course, over the past few months in particular, they've been very busy producing gold. And that's how a backlog can very quickly be established
Hmm.
in silver, right? So if you're producing gold 4 days of the week normally and one day of the week silver, and that's under normal market conditions sufficient to provide enough silver products for the market, it doesn't take a whole lot of weeks where you don't do a silver product run, but only do gold product runs. You know, you do that 2 or 3 weeks and you build up a backlog.
Yeah.
And then if demand increases, all of a sudden, you know, that backlog
It
exponentially
starts
grows because
ballooning.
you're facing higher demand, but you're in a backlog situation already. So I really think that is where the misallocation is. And the other thing is that people tend to think that the factories that produce these gold and silver bars are somehow financial services outfit, right? So they're not. These are factories that are producing a precious metals product, but
Hmm.
they think in terms of shifts. They think in terms of what's coming in and how's my load factor of the equipment that I have in my factory, right? And that what they're producing is in essence a financial market product that is nearly secondary to these people. You know, they could be producing Coca-Cola cans.
Yeah.
They could be producing plastic bottles. For you know, it's the same setup.
Hmm.
So and they have the same problems as any factory like that has. So they've got people who are ill. They have security concerns. They might have energy problems. They might have emissions problems, right? So I mean, obviously, producing, let's say, a gold bar or a silver bar, you've got certain emissions. Now, depending on where your factory is, you might be limited in terms of how long you can actually have your equipment produce gold and silver bars because you're constantly emitting um, side products through the chimney, right? So if you're in close to a residential area, you'll be limited. So even if you wanted to have a third shift and work 24 hours a day, you won't be able to do so, right? So again, I'm certain of this. There is no shortage of the product silver in the world. There is plenty of it. It is just right now a misallocation of what people want, which are silver bars, and what people are producing.
Hmm.
And that there has been a backlog building up over the past few weeks, and that's then exacerbated by people's demand all of a sudden shooting up, and
Yeah.
and it very quickly multiplied into the scenes that we saw, you
Hmm.
know, where people were, you know, going from jewelry shop to jewelry shop and trying to, you know, on the one hand, some people were trying to buy silver and gold products. On the other hand, people were
They're
trying
trying
to
to cash out.
sell them, right, to
Yeah.
cash out. But instead of, you know, talking to one another in the queue outside and maybe doing a private deal, which they could have done, they were waiting to get into the store, and that's where the misallocation again sort of exponentially grew.
Yeah. Maybe they need a Craigslist platform or something for precious metals. People can barter
Yes.
between among themselves, right?
Yeah, well,
But
absolutely. And again, we've got customers who, you know, they wanted to sell. They came to us. We gave them a quote. We always try to give the most reasonable quotes that we can, but we do have certain costs in terms of transport, in terms of melting, and then in terms of payouts and so on and so forth. So, you know, and obviously we're a business, so we're doing this for profit and not
yeah.
for non-profit. So, and if they were unhappy, you know, and they didn't like our quote, they sold it privately and got a better price. And that's the beauty of a physical gold product. Of course, you don't need a counterparty. You're completely independent of the financial system. You
Yeah.
don't need a bank. You don't need me. You don't need a refinery. You don't need a government agency. You know, if Jeff wants to sell Patrick a 1 ounce gold coin and we agree a price, it is, you gold and I pay you whatever we determine is the counter value of that 1 ounce gold bar.
Hmm. Yeah, and back to that point about the misallocation, it's understandable, and I hope for the viewers that they understand that, for in from this perspective of the factory, they're only pumping out a commodity. Like you said, it could be aluminum cans or cardboard boxes. And of course, they the high value item, which is gold in this case, would take precedence. And that's the
100%.
priority. Well, thanks for your time again, Patrick. Always a pleasure.
My pleasure. Thanks for everything, Jeff. Always
Thank
great
you.
talk.
See you again soon.
Take care.
Bye.
Bye.